Hello, my name is Hank Abramson. This is Business Beer and IP, a vlog brought to you by Henry Martin Law. My name is Hank Abramson, and today we're going to be talking about the 6 big things you need to know about commercial leasing. So sit back, relax, and let's get going. Start the music. All right, welcome back. Let's talk about the 6 big things you need to know about commercial leasing. The first thing that we're going to be talking about is the personal guarantee. Now, sometimes landlords will put this into the contract and sometimes they won't. A personal guarantee basically says that if for some reason you default under the lease, whether that's your failure to pay certain fees under the lease or your rental payments, or you breach some other provision under the lease, then they have the ability to come after you personally. They can get to your personal assets, your personal monies, and anything else that you may own personally. Now, oftentimes you'll set up a business entity like we've talked about in the past, a LLC or a corporation with limited liability entity for the exact purposes of separating these potential business liabilities from your personal assets. That's the whole point of setting that up. So push is going to come to shove here. The landlord wants to be able to get to your personal assets. You want to keep your business liabilities separate from your personal assets. And how's that going to break out? It depends a lot about who has the leverage in the relationship and what the marketplace is looking like. I would say for the last maybe decade, I haven't had many clients actually agree to a personal guarantee, or where they've agreed to a personal guarantee, it has been limited. They've limited it to a year or two. You can understand from a landlord's perspective, if you're a new business potentially, maybe only in your first year or two, they may not have that kind of comfort level with your finances or your ability to pay under the lease. And so you can understand from the landlord's perspective that they may want a little security. However, again, you don't want them to be able to get to your personal assets. So potentially, you could limit the personal guarantee to a short amount of time during which you could prove to them that you're financially solvent, your business is going to make it, and you're going to regularly pay the lease. And then everyone can have a comfort level going forward. That may be one way to do it. But again, if you set up that limited liability entity, you're likely not going to want to enter into a personal guarantee at all if you can avoid it. All right, next let's talk about the term of the lease. The term of the lease is how long the lease is going to last. Is this going to be a long-term lease, maybe 5 or 10 years? A short-term lease, maybe a year or 2 or 3? Is it going to be a short-term or a long-term with renewals? That's totally up to you and your business model. I would suggest, though, that you give special attention to whether you want this to really be a long-term lease and to lock in, being in a particular space with a particular landlord for a long period of time. You don't know what the future holds a lot of time. You don't know how your business is going to grow, or maybe it's even going to shrink if you're going to bring on a lot of employees and you're going to need additional space. Or maybe you stay small and you need less space than you're forecasting when you sign the lease. All these things are important to think about when you enter into a lease. You don't want to necessarily obligate yourself to a long-term lease for a specific period, specific payment amount, if you don't even know you're going to be in business that long or need that amount of space. So the first thing to really give thought about is how much space do you really need for your business, and look carefully about what are your plans about growth and how fast are you going to grow if you're going to grow at all. The next thing to think about is the pricing and what the marketplace looks like. If there are a lot of spaces available that kind of meet your needs and may have the same or better pricing, you may want to keep your options open and keep a shorter term lease. However, if this is a particular space that meets your business needs exactly, and there's a lot of competition for that same space, you may want to lock it up over a longer period of time. A reasonable way to do it, maybe a conservative way to do it, is to do a relatively short-term lease with renewal options if the landlord is willing. So you may do a 1, 2, or 3-year lease, something like that, and then tag on, 1 or 2 5-year options after that. So you have the option, assuming you're not defaulting on the lease and you're complying with the terms of the lease, to renew for 5 or 10 years after your first 1 or 2 or 3 year initial term is over. And that's usually a good way to do it from both sides. The landlord knows that they'll have a tenant in the long term if it's working out amongst the parties. But if it's not working out, both parties have a chance to go their separate ways. So that's usually a good way to do it. But it's very dependent upon your business needs, your business model, how much you think you're going to grow or shrink or change over a certain period of time. All right, the next thing that we're going to be talking about, number 3, is the description of the space or identifying the space that you're actually going to have and pay for versus what you're going to be charged for in the rental amount. Now, you need to be careful here because a lot of people just look at the square footage of the 4 corners, the 4 walls of the office suite or the space that they're looking at. But the rental amount is actually going to be based on what's called rentable square footage. So usable square footage is the actual square footage of the 4 corners or the 4 corners within the wall or the actual office suite or space that you're going to be using on a day-to-day basis. Rentable square footage, though, is that space, the usable square footage, plus common areas and additional areas like stairwells, elevator space, hallways, things that everyone has the ability to use, the common areas. So you're actually paying not just for that square footage that is in your office space, but also you're going to be paying a portion, your proportionate amount of those common areas within the building, and that's the rentable square footage. So you need to have a very good understanding of what the rentable square footage is that you're going to be paying for versus the usable. The more common area in that particular office building that you're going to be taking your share of, the higher your rental amount is going to be, even though the space within those 4 corners, your main office suite, isn't going to be changing. So you may be actually paying more rent for the same office space than you otherwise would if there's a lot of use or rentable square footage in that building. And that's what's referred to as load factor. The greater the load factor or the amount of this common area on top of your usable square footage, the greater your rental amount is going to be. The other thing that you need to be careful of is how in the lease that language reads regarding your proportionate amount of common area maintenance, the insurance, the real estate taxes, and so forth, the triple net, if it is a triple net lease as opposed to a gross lease. Some landlords will try to structure in a lease that your proportionate amount is based on the proportionate amount of occupied space in the building. Well, what happens if all the other tenants fall out and now the whole building is not occupied but for you? Now you're going to be paying triple net of 100% of all of those, the taxes, the insurance, and the common area maintenance, or the CAM amounts. What I like to do is I try to structure this so it's the proportionate area of your proportionate area of the total square footage of the building rather than necessarily the occupied, so that you have a static portion that you're going to be paying of those triple net factors. Otherwise, like I say, if if the occupancy really drastically falls and you're not expecting that, you could end up paying a lot more in those triple net expenses than you're bargaining for going into it. So when you're looking at pricing of the square footage, what you're actually getting and what you're actually paying for, you need to keep these various things in mind. All right, the fourth thing that I want to talk about may be more or less important to you depending upon your business model. And that is the ability to sublet your space. Can you sublet the space? If you don't need it anymore, can you sublet to someone else the entire portion of the space? Or sometimes your business model may be structured so that you want to actually be a sub-landlord and rent out to tenants of your own. You may actually have this as part of your money-making business model. So you may have an entire space that you rent as kind of a sub-landlord and rent out to other related businesses or even non-related businesses, and you may want to make a little bit of money off of those rentals. Well, oftentimes a lease is going to be written so that in the event that you do sublet, if you do have the ability to sublet, and it's part of your business making model, any and all monies that you actually obtain that are over and above your rental amount, you have to give all or a portion of that to the landlord. And you can understand from a landlord's perspective, they may not necessarily want you coming in and making money off their property. And if it actually has a higher rental value, they may want to capture that for themselves. So you can understand that from a landlord's perspective. On the other hand, some landlords are a little bit more understanding of this, and as long as you're complying with the lease and you're doing what you're supposed to be doing under the lease, then your business model is your business. So before you get into a lease, just think about, what is my business model? Am I going to want to sublet the space? Or maybe if I have to go out of business or move or something, I'm really going to need to sublet the entirety of the space to someone else and have them kind of take over the lease. Give some thought to that before you enter the lease and make sure the language matches up with your objectives before signing on the dotted line. So the fifth thing we're going to be talking about is who repairs and maintains the space. Now, I think it's pretty reasonable for there to be an expectation that you're going to actually maintain and repair the immediate space that you're in. Whether you do some damage to the wall or you do some damage to the carpet or the ceiling or something like that. I think as a tenant, that's something that you would expect to take on. But how about the big things, especially HVAC, the windows, the structure, the plumbing of the building, the electrical in the building? These are big picture things that affect the entire building, and you would think that as a landlord, they're going to be looking over those things for you in the bigger picture of the repair and maintenance of the building. But not necessarily. You have to read your lease closely. I've seen plenty of leases over the years where the responsibility of repair, maintenance, replacement of HVAC systems, of electrical, of plumbing, is sometimes attempted to be put on the tenant. Now, if you're moving into a larger space or even, a medium-sized space as a small business, and the landlord wants you to take on the liability of replacing and repairing the HVAC system, which can be incredibly expensive, especially if it's an older system, you definitely want to try to avoid that. That could be a business-ending mistake. So you really need to read the lease closely and see what it says with respect to repair and maintenance and which features of the space that applies to. And then if it doesn't fit exactly what you need or it worries you or concerns you from a liability perspective, which is understandable, then you need to try to negotiate as much of that away as you can. All right, the sixth thing that I want to talk about today is casualty. Now this sounds a little serious for a lease, this term casualty, but what it's referring to is a major disruption in the office space caused by a flood, a fire, an earthquake, or another kind of natural disaster, things that would disallow you or prohibit you from using the office space as you might require. And usually if you look at the language of the lease, it will break it up into a couple different situations. A significant destruction of the property where 75% or more or 50% or more of the property is deemed unusable and you really just can't use the space. And then, a minor interference. Maybe there's a fire in a small part of the building or a flood in a small part of the building or office space, and you can use 80% of the office area and still get by while the minor portion is being repaired or replaced. So it's important to look at the lease and how that is all broken down. And then what are the responsibilities of the parties? If it's a major event and you can't use the space at all, is the landlord going to take ownership of repairing the space and making it new? Is the lease going to automatically terminate? Are they going to make you wait for a certain period of time before they tell you whether they're going to terminate the lease or allow you to abate rent? You have to think about this as a business because while that space is unusable, you could be losing valuable business. You can't see clients or manufacture the products that you're supposed to be manufacturing. It can be devastating to a business. So you want to make sure that you're not tied down for a long period of time before the landlord notifies you as to which way they're going to proceed or whether the lease is automatically terminated or what it is. If it's a more minor kind of repair type of situation to a lesser portion of the space and you can still use the space, then you also have to read the lease closely as to what it says here. and whether a portion of your rent is going to be abated for that amount of space that you can't use, or you're expected to pay all your rent and continue under the ongoing obligations under the lease until the landlord can repair the space, or make sure that you're not responsible for paying for and repairing the space, unless of course it's your fault for some negligence or gross negligence or intentional act of you or one of the parties of yours in the space. So there's a lot of different things you need to think about in terms of casualty in the space, the timing, who's going to pay, whether rent's going to be abated, whether the lease can be terminated, whose fault it is, and whether that determines who pays for the repair or replacement of the space. So all of these things are very important to look at the nitty-gritty and get into the details of your lease. And that's what a lot of the review of the commercial lease is about. You know your basic rental amounts, and generally the space that you're going to be getting, but you really need to read the nitty-gritty details of the lease, because those little things are what often comes back to bite you in the end. 3 years down the road, you want to make sure that you're not responsible for a 6-year-old HVAC system, for example. Even though you're getting a fair rental amount up front for the space that you're getting, maybe you love the space, but if you're stuck with replacing a 6-year-old HVAC system, I mean, that could be the end of your business, and you don't want to sign on for that. Also, you want to be very careful, looking at whether the lease includes the personal guarantee or not, and whether you have to agree to the personal guarantee. So there's a lot that goes into commercial lease negotiations. I would encourage you, if you're presented with a commercial lease, especially a complicated, longer commercial lease from a major landlord, that you have someone with knowledge in commercial leasing look at that and advise you and help you negotiate that lease, because there are a lot of things that could come back to haunt you if you don't look carefully enough, or you don't know what you're talking about when you review the lease. All right, thank you again for joining me today on Business, Beer, and IP. That's me, a vlog brought to you by Henry Martin Law. If you like this video, please click the like button below. And if you'd like to follow future videos, please press the subscribe button below. It would really help the channel out a lot. I hope you learned a little something today about commercial leasing, and we'll see you next time.